Joining us now, David Wessel, Brookings Hutchins Center on Fiscal and Monetary Policy. Mike Santoli is also here. David, we'll just start with this. Earlier, I made the point to Mike that we have seen very little volatility, really, with all. I mean, the news cycle is how long? Have you calculated the half-life of a major news cycle in today's world? Whether
it's the space between presidential tweets.
But the volatility has been very low, and there are some people that argue that it has to do with the Fed being accommodative and central bankers. But it's also things are pretty good in terms of earnings as a backdrop, too. But do you think the Fed is involved there?
I don't think the Fed has that much role. I think, obviously, if the Fed were tightening, the market would respond. It is kind of amazing, though, how complacent the market seems to be. But then you reported earlier today the earnings of companies like Starbucks and McDonald's suggested the economy's going. What I find really kind of disturbing is, so rates are rock bottom. They're below the inflation rate. CBO says the budget deficit is $1 trillion for as far as the eye can see, more than 4% of GDP. So you have both the fiscal and monetary gas pedals pressed to the floor, and you're not getting any inflation, and the economy is doing well, but you'd think we'd be at the point where they'd have to be pulling things back, and they're not.
Do you think at this point, David, that we are too complacent about inflation and that we have the feeling that it's dead and buried?
No, I don't think we're too complacent about inflation. I mean, it's remarkable how slow prices have been to rise to the Fed's 2% target. The Fed knows what to do. If inflation rises too much, they'll raise interest rates. The big mystery is why hasn't inflation gone up more? I think we may be a little complacent about the risks of things like the coronavirus or war in the Middle East sort of turning everything upside down, the stuff that's really hard to quantify.
I mean, in a way, that's the answer to the question, though, is the fact that all of these things thrown at this economy has left us in a 2% world, which is 2% growth and less than 2% inflation, less than 2% 10-year Treasury yields. I mean, you can basically say that even though that might be unsatisfying, given all the firepower thrown at the economy, and maybe it's going to go up from here, but that's very comfortable for financial assets, and that's kind of how you square that.
I agree.
Yeah, but you always come back to technicals, too, though, don't you? I mean, that fundamentally, I can explain it. But technically, it just makes me wonder whether we're...
Well, I mean, if you talk about the reason we have a very long expansion is that it's not really gyrating that much in accelerating and slowing down very dramatically. So that's the market itself. Plus, these huge companies running the indexes are not that cyclical at this point.
Yeah. David, I mean... things are pretty solid in terms of the consumer, and you saw Apple and just across the board, things are pretty good. And we were in Davos. You could not believe how positive people were, even globally, about growth.
Right. So I guess that leads some people to say when everybody says everything's going to be wonderful, it's the time to go out. And that could be. I mean, it is kind of incredible to me, though, that given the risk that the coronavirus seems to present to the world, to the global markets, to big companies, we had one bad day in the stock market, and then it's been up ever since. So I really do think that's a wild card, and I think that has to be on the Fed's mind. If you're already kind of a dovish leaning, as Steve said, and you look at the risks out there, I think that they judge that the risk that something bad happens exceeds the risk that somehow miraculously we get 2% plus inflation.
David, maybe we get a change if we get Judy Shelton on the Federal Market Committee. I know that yesterday the president sent up the names of Judy Shelton and Chris Waller. I think she's in the camp that's in the, I guess, let it run camp. We can talk a lot about her other views when it comes to being a gold bug and her change of policy from one administration to the next. But I think ultimately, David, she's a let it run. Let's see how far we can go with it.
I don't think she'll have much influence, but she's going to be a lot of fun to cover.